Enbridge. If you're a Canadian investor, this company needs no introduction. It's the crown jewel of the Canadian energy sector. So I won't spend too much time trying to convince you to invest in Enbridge. The web is filled with articles, videos, and opinions which analyze Enbridge in detail. But I'll try to summarize what I think are some of the key points when it comes to this company in 60 seconds. And then I'll show you how to get a 13% dividend yield. And no, it's not a joke. Enbridge is Canada's largest energy midstream company, which means it operates the infrastructure and transportation of oil and natural gas needed to service a huge piece of North America's energy needs. So it's valued at about $85 billion right now, the third biggest company on the TSX that gives a dividend after Royal Bank of Canada and TD Bank. It's raised its dividend every year for the last 25 years and is not planning to stop. It's a leader when it comes to ESG performance. So ESG, which stands for environmental, social, and corporate governance. More and more younger investors tend to consider this factor when investing since they're more conscious of environmental and social issues. When it comes to total shareholder returns from 1995 to 2020, Enbridge beat not only the TSX Composite Index, but also the US S&P 500 Index. So this simply means that it beat the average return of both the Canadian and US stock markets. It's very disciplined financially, has a very strong balance sheet, and it's investing heavily in renewable energy, so it's focused on the future. So how the heck can you get a 13% dividend yield with Enbridge? Well, let me show you. So here's Enbridge, guys. Of course, the stock symbol for Enbridge is ENB. So it's September 16th, the market is closed, and the final price of Enbridge is $40.81 per share. So if you scroll down to the dividend info, you could see here the annual dividend rate of $3.24, and the annual dividend yield, here's the important part, of 7.94%. So you might be wondering, okay, where is the 13%? Well, you know how the stock symbol is ENB. If you just trade that B for an S, you get a company called the E-Split Corporation, ENS. So if you scroll down to this company's dividend information, you could see that the dividend yield is 13.51%. So what is the E-Split Corporation? What does it have to do with Enbridge? And most importantly, how does it manage to sustain a 13% dividend yield? Well, like the name says, E-Split Corp is a split share fund corporation. I made 2 videos covering these funds in detail and how they work, as well as my favorite one. So make sure to check out those later if you're interested, but I'll try to summarize in 60 seconds here. Split share funds are a specific type of fund to maximize the income you get from a basket of dividend paying stocks, or in this case, one stock, Enbridge. So this fund actually invests in the common shares of Enbridge and uses strategies to boost the dividend income you get. So let me explain that. It's called a split because there's actually 2 classes of shares. You have the preferred shares and the Class A shares. So ENS, the stock symbol ENS, is actually the Class A shares, but ENS.PR.A is the stock symbol for the preferred shares. So the preferred shares work like preferred shares in general. They get a fixed dividend. That's why preferred shares are considered fixed income. So the dividend for ENS.PR.A is actually funded by the dividends that the Enbridge shares already provide. So not worth it at all in my opinion, because the dividend yield of the preferred shares is actually less than the dividend yield of just owning regular shares of Enbridge. So ENS, or the Class A shares, is where the magic really happens, guys. These shares are funded by any leftover dividend income once the preferred shares are paid off, plus the income generated by selling covered call options. So the covered call strategy, something I talk a lot about in my videos in my channel, is a very easy and zero risk way to generate a lot more income. Check out my covered call video if ever you don't know how this strategy works. So on top of this, on top of the covered calls, the fund manager also uses another tool to make more income, and that tool is leverage. So leverage is basically borrowed money the fund manager uses to buy more Enbridge shares. So more shares equals more income. So you got covered call option income, leverage, capital gains, and of course, regular share price appreciation. Combine these four things together, and voila, you get a much higher dividend yield than owning the regular Enbridge shares by themselves. So currently, about 65% more. So that's a huge increase. So let's quickly check out the homepage of the eSplit fund, just so you could quickly see what I'm talking about here. So the eSplit fund is managed by Middlefield Funds, a really good company, asset manager. So here's the homepage. You can see here, it literally says enhanced participation in Enbridge. So this is a unique investment delivering both growth and income from Enbridge shares. So you can see here that there's the two stocks. That's why it's called the split. So you have ENS, the Class A shares, and you have ENS.PR.A, the preferred share. So they each have their own stock symbol. And if you click on the fact sheet here, it'll open up and you can get some more details. Sorry if it's a bit small. You can see here the Class A shares, enhanced participation in Enbridge total return, current leverage of approximately 2.0. So there's the leverage. That's why you're getting that jacked dividend yield. And as you could see here, you got some more information, 25 years of consecutive dividend increases, and just a couple of stats on Enbridge. So you could read up more yourself. There's a couple of tabs here, the press releases. There's a NAV. So this is basically a fund. So every fund has a net asset value or a NAV. You could see here that the Class A shares have a NAV of $10.05, and the preferred have $10.11. That just goes to show you that it's a split fund. There's two separate classes of shares, and of course you have the dividend history here. So the dividend has remained pretty steady. The company the fund was created in 2018, and this is actually one of the only split share funds that I've seen that's actually increased the dividend on the Class A shares. So simply amazing. They increased it because of the dividend increase on Enbridge. So you could see that here. They did it in May 2019. So it went from 10 cents to 13 cents. So a really, really good alternative investment if you want to invest in Enbridge and get a lot more income here. Pretty straightforward. So there you have it, guys. If you like Enbridge and you like making a lot of money, the eSplit Share Corporation Fund is definitely for you. If you're interested in investing in this stock, I strongly suggest you check out my two videos on split share corporations, where I go into detail on how they work, as well as my top 5 picks, ENS being one of the 5. Also, if you're interested on reading up more on Enbridge and their business, I'll put a link to their Q2 investor presentation for this year. Some really good stuff in there. So please hit that like button, guys. If you learned something from this video, I would really appreciate it. And of course, stay tuned for my future content, including my monthly stock picks of the month, and as well as other high income strategies to give you passive income. So my mission, as always, is to help you make passive income to reach that ultimate goal of financial independence or financial freedom. So with that, guys, take care and see you next time.